Okay, this video is about support and resistant lines. And you have to remember that support and resistant lines are not always accurate. They're not 100% for sure. And sometimes they're only 50%, sometimes 70%. But it's something that you can use as a tool, just like I use these balance boxes and these spikes and the Fibonacci as a tool. So the way I was taught about support and resistance lines and what I see on YouTube, how people are teaching, probably going to be different than what I'm going to teach you here, because support and resistance works on different time frames. So you have to find out what kind of trader or investor you are. If you're short term, if you're a day trader or a swing trader, that's what I am, considered a swing trader, because I trade in and out of the market within a couple days, sometimes the same day, but usually a couple days, a week, up to about 2 weeks at the most. And so that's considered a swing trader. And then there's long-term traders, which are a little bit longer. Could be 3 weeks, 4 weeks, couple months. And then you have the buy and hold people, which I don't even really mention that here, because I'm not. That's what I don't do any of the buy and hold at all. So okay, in this chart, I put in these balance boxes, just an example, and then I put the spikes. So these are examples. This is a chart that I trade. This is the ES, the E-mini S&Ps, and then there's some support and resistance lines within these. This is a 4-hour chart, just to give you an example. So on a 4-hour chart, you can see there's the top of this balance box would be considered resistance, and the bottom would be considered support. And of course you have little balance boxes here, and again this is resistance, that's support. Once a market breaks out and comes back and starts testing this line again, that would be considered support. So this resistance turns into a support. It never broke. It spiked down a little bit, and then it came back up, and then it formed another box. And again you have resistance up here and support. And again it broke down, came down, supported a support down here, and resistance in this box, and then broke above. So same thing happened here and here, here, and then we're here now. So this is actually live. This is the overnight trading, and I do have positions in this now, but this is live. The market's actually really moving right now. It's really moving real time. So just to give you an idea of what resistance support lines on this time frame is, like I said, there's different time frames. There's intraday, which is what the day traders use, and this is more of a swing traders chart. This 4-hour, I use a 4-hour and a daily chart, and sometimes I'll use a 30-minute chart just as a reference when I'm getting into a market. But anyway, this is pretty much what I look at, the 4-hour and a daily. So that's what I'll stick with for now, and I'll show you the other resistance and support lines on the other time frames. So for now, this is what we got. Like I said, I use these balance areas a lot. I don't always draw them in my my charts, because pretty much I like to focus just on a short term right here, like whatever is happening, like actually even from this line on, because I'm not really concerned about this here, and that's because it's already happened. Focused on this. So I'm just going to give you an idea of what's going on here. So this market came up and it started hitting the top, and this balance box could be raised up a little bit here. and it just hit, and it tested it. It broke through, but it came back, broke through, and came back. So that's obviously a resistance line. And down here is a support. So once it poked through and it came up. This time it poked through and it stayed in here in this area. And then on Friday, this is actually Sunday that I'm doing this. On Friday, the market actually poked through and it stopped right there. And then Sunday, which is today, it opened up at 3 o'clock Pacific Standard Time, and the market went straight down. So it's staying into this balance area, and this is what I considered resistance here, support here. So when this market, if it continues and it breaks through like this one did, and on the second bar, if it continues down, then I might buy some more positions. That would be the time to do that. Or for anybody who doesn't have any positions, that might be a time to buy, expecting this market to go down. So this video is not only on support and resistance, but it's how I trade to get into the market and to get out also. So like I said before, the top would be the resistance, and then you got support. So if I bought into here expecting the market to go up and the market came down instead, then I would have to sell at a loss. Same thing with here. If I bought, let's say, down in here expecting the market to go up, and it came up and it came down, tested, and then went straight up, then I can probably sell into this area. Just an example. It doesn't mean that's what I do all the time, but that's an example of what can be done as far as buying and selling off of support and resistance. Okay, so this is a daily chart, so it's a longer time frame, and you can also figure out, this right here would be support. This is an obvious support right here, because on a daily chart, each one of these lines is a day, and it came down and it tested this area in here. I'm going to draw a line right there. So that can be considered a support. Market came down, tested, it finally spiked here, and then it went straight up. And it came up to here, it stopped. So the other way you can mark support and resistance line, like this one here, this came up, and you look for lines that are let's say a resistance line. If you're looking for a resistance line, I would draw one pretty much right in this area. Let's say right here. And that's because the market kind of came down and tested here and it went back up. Same thing with this. It stopped right about here, came up here, it stopped, came up here and stopped, came up and stopped. So this is an obvious resistance line. So again, these resistance lines can be accurate, and sometimes these markets just blow right through and then they come down, and so you can't always depend on them. Now, the reason why I bought in short in here, just to give you an example, is not only because it's a strong resistance, it's because the market's pretty much overbought in this area. Now, if the market wasn't overbought, let's say it was just taking off, and there is a support, actually there is a resistance line somewhere around here, let's say, and that's considered a resistance line. But this market just blew right through, came down, tested. So you can't always depend on this for trading. So you have to be careful with that. First you have to see where the market is. This market obviously broke out of, let's see, where am I? Rectangle. Well, actually this is a balance area. Let's say there's a balance area, okay, which it is actually, but you know, the market broke out in this balance area, and it kept going. So even though that was a resistance line, it can still go through if it's ready to do that, because it's been channeling for a long time, and then it just pops right through. And then it comes back, it tests that line and goes through. So you can't use this as a reference as far as saying this line came up here and stopped, so now it's got to come all the way down and break. You know, it doesn't happen that way. So these are reference lines, and you might trade them and you might not. Again, this was a reference line here, and the only reason why I bought put options here is because the market actually started here and it went all the way up to here. Or you could say short term, it started here and came up here. So now it's time for a correction. As I had mentioned in my other videos, these markets always correct. It goes up, it comes down. It goes up, it comes down. It goes up, it comes down, up and down. So they always correct. You'll never see a market that does not correct. And again, the reason for it correcting is because this market is all based on two things: buying and selling. That's it. So if you have people down here, all these sellers came down here. Eventually, the buyers are gonna step in. They're gonna come up here, and then they're gonna run out of buyers. And then you got all these sellers down here. Now buyers step in here, and then eventually the buyers take over, and they run this thing all the way up. And now it's time for this thing to come down. At least that's what I'm expecting. Of course, this thing could turn around and go back into this balance area right here. And then if this is still in this mini bull market here, it can break loose and break above this resistance line and then keep going. You know, and that would probably be a strong force going up. Now that's if we continue this little bull market within the bear market. Still in the bear market here. Okay, so here's a longer time frame in here. And you can almost say that, so you get rid of that one there. In the long time frame, that this thing has developed a right there, a balance area, a big balance area right there. Okay, so why is that? First of all, if you draw this line all the way across, you'll see it hits the top of this. It comes in, this thing stopped there, and you got a couple spikes. Don't really count the spikes, so it kind of stopped there, definitely stopped there. So this is a pretty good resistance point right here, even in a long term. And in a support, it's pretty good support because the market came down, hit, and it bounced, came down, and here, of course, it's not 100%. Sometimes they poke through, but it did build a support line. And then eventually, this would be considered a balance area. So right now this market is balancing in this box, meaning that it comes down, hits, comes up, hits, comes down, hits, comes up, hits, comes down. Now, I would consider this a pretty strong resistance line, long term, meaning that this market came up, hit, and now it's time to come down. Now, how far, that's a big question, and how you would trade that is another story too. So within this box, this balance area, you also have support lines, and you've got one right here. So there's another support right there. And so what are you going to do with these support lines? You can actually, here's another one right here. You can actually use these to actually get, if you have a short position of put options, you're going down, you can actually use them to get out of the market, if that's your trading strategy. So you got to figure out what your trading strategy is. And that's what these support and resistance lines are for. So again, these support and resistance lines can be kind of tricky. They're just a reference line. It doesn't mean that you're going to trade it, meaning that here's a complete resistance that it's never going to break. That's not true. You know, if the market has come down and hit that so many times, then it's pretty strong. But if this market were to come up here in this area, like it did here, but stay up here and keep going, then that means this is a strong support line now. And that means that it'll probably take off pretty good. But because we're in a bear market, I doubt if that's going to happen. Now, because we're in a bear market and because it's built this big balance area, I believe this is a pretty strong top here. Now, how far this is going to go down, like I said before, that's a good question, and that's the part that you're going to have to decide. So if you did buy put options here, like I did, and now you're down here, so now you're in the money, you're making money. So you have to decide how far this is going to go down until you get out. Now, if you're a longer term trader and you believe that this bear market is going to last for another year, let's say, then you can buy some longer term put options and just write it down, even though this market might come back up and test this again and then finally break down, as long as you have put options that are further out. So that's what I call a long-term trader, because you're in it for, I don't know, a couple months, let's say, long-term. So since I'm not a long-term trader, then for me, I'm more focused on this little area here. And the reason for that is because I already know what the market has done. Like I said, it's built this balance area, so I know it's pretty much at the top. And again, that's a resistance line, and here's a support line. You got support lines underneath this, within this box. And if this market, which I'm sure it will, comes all the way down here, now you're going to have some resistance up in here, and I see another resistance line that's forming right here, and I'll draw that, and that could be right here. I'll start it right here. Right there. So right now the market's sitting a little bit below that line. So why is that a resistance line now? Is because the market came up and hit there, a little hit right in here, and it hit here, and then it's at the bottom of this balance area. So that's pretty good resistance, which used to be support. Support meaning that the market's up in this area, that's support. But once the market's down here, that support turns into resistance. And now it's resistance. So we're technically in below that line, and we're in, that is now considered resistance. If it pops up above here, it will be considered support. So again, this is kind of tricky because it's not an easy thing to trade, as far as you just have to figure out what your longer term vision is depending on what kind of trader. Since I'm in for let's say a couple days or a week, I got to figure out where is this market to go within that time frame, and then I can use these support and resistance lines according to that. If I am a longer term trader, a couple months, then I have to figure out, okay, this broke support and it's down in this area. Where is this market going to go in the next month or two? If you're a day trader, then you have to figure out where this market is there, you know, in the next hour or two, or even minutes. And you can see here that I drew this box in a longer time frame, and it holds here for a day trader. This box actually kind of holds too, you know, because this market went straight down and came up, and now it's kind of sitting in this little balance area in a day trade. So that means now this is support, which is support in the longer time frame. And if this market comes up here in a day trade, then you can probably pretty much be sure that this market is going to probably come down, and then you can trade this thing down. This is on a day trade. Longer term trade, if the trend is going up, then chances are it could break this line. So that's a tricky thing about trading, is you have to know where the market is going to go on which time frame. Now, of course, you can't know 100%, but at least you can come close, maybe in a 90% range. So as a day trader, and I used to be a day trader, you can put your mark here and do that and say, okay, so the trend on a day, on a 5-minute chart is actually going up. But here's resistance, pretty strong resistance if you look at it in different time frames. It's pretty strong. So as it goes up, and this is a little bull market within this 5-minute chart, and it comes up, is it going to pass thing and keep going? Or is that pretty strong resistance, and is it going to turn around? Now, if I was a day trader and I saw this, and this market came up to this area, I would short it from this point down. Now, when you short in a day trade, that means you're only shorting for a short amount of time. Okay, you're only in for maybe minutes, maybe an hour. I wouldn't trade it for an hour unless this thing starts to head down pretty good. So again, making this video about support and resistance line kind of gives you a reference, but that's not really how you trade. I mean, of course, you use those lines, but then again, you have to figure out what time frame, and then you have to figure out where is this market going. In the short term, it looks like a little bull market, but that looks like strong resistance right there. And then in a 30-minute chart, if you're trading a 30-minute chart, then you got to figure out, okay, this thing broke this line, and it looks like the market came down and came up here, and it hit several times. Let's say there's a little balance area here in the 30-minute chart, and it looks like it's a pretty strong resistance line. It's probably going to go down. So back to a 4-hour chart. So here we are in a 4-hour chart. And so this is what I usually trade right here, 4-hour in a daily chart. So this balance area still holds. These resistance support lines still hold, and these are reference lines. Another thing within these, I use the Fibonacci, which is here. And the Fibonacci will tell you pretty much again, not 100%, but it can tell you, like I said before, when these lines, they always retrace. You know, it comes up here and it comes down, comes up, it comes down. So when they go up and down, they usually come down about the 50% line, which is about here, and it usually retraces anywhere from this line to this line, somewhere in here. So if that's true with this, and this is ready to go down, then a good time would be down here, and this could be considered a support line. And if it lines up with other lines, like it does a little bit there, then it's even a stronger line of support. Same with this line here, and same with these other ones. Now this one here lines up with this support line. So as you're drawing your support and resistance, and then you put your Fibonacci's in here, and it lines up with those lines, then they're considered a very strong support or resistance line. Again, you don't know if those support resistance lines, how accurate they are, because you have to find out what trend is, and then you have to know what time frame you're trading, and then you have to know when to get out. So I got in here. Where am I going to get out? Well, so far I wouldn't get out until either this market came back up here and started breaking through, I'd have to get out with a loss, or if this market came down and hit this line here. And if it did hit this line, then I can decide if I'm going to get out or not. Or if it hits this line and I have a feeling that it's going to keep going, then I can get out here or here. And see, I don't know that until it actually happens that day. But to forecast that in the longer term, I can't do that being a swing trader. Now, if you're a longer term trader, then you can say, yes, this market came up here, I'm sure, and we're in a bear market, I'm sure it's going to wind up back down here eventually. And then you can think, well, how long is that going to take? Well, if it takes 2-3 months, then you buy your options at least 2-3 months out, and you just wait till it gets down here. And it's going to start going up and down just like this, down and up, all the way down. And now that's what I would consider a longer term trader. But since I'm a swing trader, I'm going to have to decide, once it breaks down here, I'm going to have to decide to get out either here, here, or here. And if this market is coming down with a lot of force, this market's going to have to retrace. So because I'm only in it for a couple weeks, if it comes down here, let's say, and I get out, then the market's probably going to bounce back up here before it comes down. Then I can get in again. So I play these little ranges. And for a beginner, I wouldn't have anybody do that because it's kind of tricky to do that, and you can lose a lot of money. Like I said, if you're a longer term trader, you just write it down. That's if this is going to correct all the way down to here. And that's what you have to determine. So I'm trying to make this video so I don't confuse you, but I think I did pretty well as far as explaining the support and resistance line and when I think this market would be a good time to get in, like right here, and then get out if it broke above, which is now this is resistance, and it stayed here. Doesn't just break up with one line like that. Okay, also I drew in these spike lines. I like to trade spikes. They really are, I think, pretty accurate, maybe in the 90% range. And what I mean by that is markets spike like this, and when they spike, you're going to get a pretty good run up. And this one spiked pretty good and got a pretty good run down. These are little spikes, and they pretty much tell you that's the end of that run, because it's a spike and then the next bar came up. So that ran up pretty good. Market came down about 50% of that, spiked again, came up, a little spike there, came down, spike, came up, and finally a pretty big spike here, and another hit here, and now it's coming down. So I think this is a really safe bet, saying that this market's going to start correcting now. And it's going to correct, like I said, with the Fibonacci, at least 38 to 61%, around the 50% mark, which probably brings it around this area. So pretty much that's how you trade. Sounds complicated, but actually you have to figure out if you are a day trader, swing trader, or longer term trader. And once you figure that out, then that's how you can start figuring out how these support and resistance lines work, and how these balance areas and how these spikes work. And then you can trade. But even when you do trade, you have to know when to get in and when to get out. Getting out is really important because most people don't get out in time and they just lose everything. And even if you're right, like let's say this market is going to eventually come down here, but it takes 2 months, and I buy options here, and it takes, if it takes 2 months to get down here, but you buy options that are only a month away, then it's going to come down, it's going to come up, it's going to come down, it's going to take 2 months to get here. Your options are going to be expired somewhere, let's say in here, which you could make some money. But you got to remember, if you're trading options like I am, each time it does that and bounces up and it gets closer to that expiration date of the options, it loses a lot of money. And by the time it comes down here and bounces, and even though you're in the money a little bit, it's probably not worth very much, even in this area. So again, you have to have timing. You have to know where, at least close to where the top is, or at least where the bottom is to trade up, at least where the top is to trade down. And then you have to time it. You have to say, well, how long do you think it's going to take to get to this point if you're a longer term trader? Short-term trader, a couple days, maybe a week at the most. Where is this going to wind up in a week? You know, and then where are my resistance lines? Where are my support lines? Where's the Fibonacci line? And then you follow spikes too. You know, a spike up like this one, come back down and say, oh, looks like this market's going to go down, but that doesn't mean it's going to continue down, because obviously it went up. So you can trade from here to here and get out. That is considered a short-term trader, or even a day trader. Okay, I know this sounds confusing, but the first thing you have to decide is what kind of trader you are. That's number one. And then you have to decide where the support and resistance line are according to that chart that you're trading. This is a 4-hour chart. And then you have to decide, you know, like me, I draw these balance areas, and then you have to decide when a market breaks out and you have confirmation, how far is it going to go? Is it going to go all the way up to here? I mean, who knew it was going to go that far? I don't know, maybe there are people that knew that. But for me, when it broke off, I didn't know that, or broke out. But when it started heading this area, I thought, oh, it's got a pretty good chance it's going to go up. But wait a minute, it's starting to balance here, and from here to here hasn't really corrected. And there's your correction right there. And now if you think that it's going to continue up and it hits this little balance area, then you can buy again here. You can buy some calls and then ride this thing up. Oh, there it corrected 50%, but then it continued, corrected 50% and continued. Okay, I think I explained it pretty well. I've been trading for about 24 years, so a lot of this stuff is second nature to me. I don't really think about it. I just have a feeling. I'm going to make a video on intuition. So, okay, so anyway, if you want to stick with this market, you want to spend years to do it and learn, you can do it. Now, another way to get past that and to learn quickly is to have a mentor. If you have a mentor, then you can bypass a lot of that crap, you know, all that money you're going to lose. And so hopefully I can be that mentor for you and help you out in this trading, and help you with, you know, the 24 years experience on this. So okay, so I think that's enough. I think it's a pretty good video as far as support and resistance lines. If anybody has any questions, go ahead and put it down in the comments, and then I will answer that for you. Okay, that's it. Thanks.